Hello everyone, this is Paul from the Pen Academy, and in this video we're going to be talking about the head and shoulders pattern, or you can call it the head and shoulders shape. Now, in this video we're going to organize it in this way. We're going to be looking at first the types of market movements, and then we're going to be looking at what a head and shoulders pattern is, and then we're going to be looking at the types of the head and shoulders that we do have. Most people think that we only have two, but we're going to be looking at the different types of head and shoulders patterns that we do have. And then after that, we're going to be looking at the use or the rules of how we use the head and shoulders pattern. Most of us are getting trapped in this. Yet, if you're able to identify the head and shoulders, you're going to be very profitable, and your accuracy is going to increase, right? So let's get straight into it. Let's start with the types of markets. Now, we have a full video about the types of markets, but here I'm just going to go briefly through them. We have one, the uptrend, whereby the market is making higher highs and higher lows, higher highs and higher lows. Then we have the downtrend, where the market is making lower lows and lower highs, lower lows and lower highs. Then we have a ranging market where the market is making equal highs and equal lows, right? Now, someone may be wondering, why am I telling you guys about market movements, yet we're studying about head and shoulders patterns or head and shoulders shape? For you to understand or be able to use or to be able to identify any pattern or shape, you need to understand, where am I in the market? Where are you in the market? Because these shapes form or are created at beginning or end of market movement. If in an uptrend, a shape will be created at the end. Or if in a downtrend, a shape can be created at the start of a move. Are we together? So either beginning or end of a move. It can be an uptrend or a downtrend, right? Even in a ranging market. Now, in a ranging market, it can be created when there's a breakout going to happen. So you need to understand these types of markets or market movement, sorry. In case you're not very well acquainted with them, we have a full video. I'm going to attach it in the description. I hope you guys will be able to utilize it. So we have these types of market movements, and they help us to identify how the head and shoulders comes about. Let me just give you an example briefly before we even get deep into the video. For example, if the market is making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high. The moment, remember all these, we talked about them in support and resistance. All this, when the market moves and creates a higher high, that's a normal market situation that's making uptrend. But the moment the market breaks below here and comes here, it means that we have broken a previous what is supposed to be a support, because before here it was resistance when price was below here. When it was broken above, it became support. When support is broken downwards, it becomes resistance. So here we expect the market to come and retest here. Of course, it's also possible the market can break above, retest, and then continue. Now, this one we're going to talk about in the parts of the rules, where most people are going wrong. Most traders are just assuming things. They're not using rules, right? And also, before we go any further, I would like to remind you that our teaching style, or my teaching style, usually we start with theory. So please stick around until the end of the video, because most times you may think, hey, this guy is just doing theory. No, we normally start with theory. I make you understand, or we make you understand in all our videos first, what we are studying about theoretically, and then we go and do it on the chart. It doesn't make sense for me to go on the charts when you're not understanding what I'm showing you on the chart. Are we together? So we need to first get the theory properly. Then by the time we're going on the chart, you can be able to identify with me. As I'm identifying a shape or pattern or whatever we're identifying, you're able to move along with me. I don't want to lose you along the track, along the way, right? So this is what I'm going to be talking about. So we expect the market to come and retest here and then break below. So when it breaks this is what we call head and shoulders, but not yet there. I'm just trying to show you why I'm telling you guys to know about the types of market movement. We have uptrend, downtrend, and ranging market. And I've told you here we're making higher highs and higher lows. Here we're making, in a downtrend, we're making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Now, when the market is making lower lows, it can give you also a type of head and shoulder called inverse head and shoulders. We're going to look at the types briefly of the head and shoulders. Now, when the market breaks above here, of course, this is a resistance. When the market was down, it was resistance. When it breaks above, it becomes support. So we expect the market to retest the support and then move up. Break also this, what we call a neckline. We're going to talk about it, the formations. Now, of course, it's possible also for the market to break down and continue. Of course, we all know that market is about probabilities. There's nothing like a sure thing or a sure deal in the market. So you have to trade with probabilities. That's why risk management is highly recommended. Very, very key, right? So this is why I'm teaching you, we're talking about these types of markets, in case you're wondering, why is it the first thing we're looking at before even we define what a head and shoulders is? So let's straight away go to defining what a head and shoulders is. Let me give you 3 seconds to guess. What do you think a head and shoulders is? What is a head and shoulders? You can guess before we get there. 5 seconds. 1, define it within yourself, and then I'm going to talk about it. Then you mark yourself. 1, 2, 3, 4, 5. Let's see if you got it right. So what is a head and shoulders pattern, or what we call a head and shoulders shape? Simply just look at yourself. In the market, usually when price is making its movement, it normally tries to create what looks like us. It tries to emulate what looks like us. That's why we call it the head and shoulders. It creates 2 shoulders, and then with something that looks like a head that protrudes through in between the 2 shoulders. Just look at yourself. You have a head that's in between your 2 shoulders, right? That's why it was named after that. So we define it as, it's a structure that is created by price when price is moving in the market, and it emulates the heads and shoulders of a human being, right? So how does it look like? It looks like this. It creates a shoulder, comes down, breaks this point, right? Now, one of the major characteristics of a head and shoulder is this turning point here, what creates a neckline. Now, when the market breaks this turning point and comes and stops here, right, and starts moving up, there is a higher probability, listen to this statement, there's a higher probability that it's going to come and stop here, but we don't know yet. We shall only know when it changes trend from here to come down here. Now, most of the traders get trapped here. They think because it has created now, they assume this is a shoulder, this is a head, this is a shoulder. But this market or this price can turn from here and then continue up. It even creates a W, retests the neckline properly. And also, if you've not, you don't know about Ws and Ms, there's a full video that we made about them. I'm just going to attach in the description. Make sure you utilize about it. It can easily create a W and then continues up. If you're falling a victim about this, you can just comment in the comments below, and then we know, right? So in case you've been falling a victim of this, make sure you follow the rules that we're going to be talking about, right? Now, so you have to wait for the market to give us a change of trend, come down, and it has to break this neckline. Because remember, these turning points, we said that they are very, very key. They create what we call support levels and resistance levels. So for it to be head and shoulders, this level has to be broken and becomes resistance. So the market retests here and then continues down. So this is how a head and shoulders looks like. We can also have another head and shoulders that is now downwards, because remember we said they form at the beginning or end of those market movements, either an uptrend or downtrend or a ranging market. So we also have one that can be created when the market is moving down, right? So we break down, we break above, come retest here. Then it only becomes a head and shoulders when we break above, and then we expect a retracement to retest here, and then we push up together. So this becomes your shoulder, this becomes your head, this becomes your shoulder. Am I making sense? If I'm not making sense, please ask any question or what you feel you've not understood. And then we shall try to make it make sense for you. So this is how it comes about. We have this one that forms at the end of a downtrend, end of downtrend. Then the first one we talked about forms at end of uptrend. The first one we talked about before we came to this, end of uptrend. And now this is what we call inverse. Sorry, let me just write them properly. We have the straight head and shoulders. Let me just abbreviate them. And then we have the inverse head and shoulders. Are we together? Now this one symbolizes the head and shoulder, which we first drew like this. This one making the shoulder, this is the head. This one symbolizes that we should start thinking about sell. Not you're supposed to sell, but start thinking about or looking into your rules to see what may give you a sell in case they're fulfilled. And then this one is symbolizing that very soon there's a possibility buyers may push into the market. This one, which is inverse, because remember it's forming at the end of, it's a shoulder, this is a head. Remember it's forming at the end of a downtrend. So it will be symbolizing for us a possible buy coming in, while this one symbolizes a sell. I hope we are following. If I'm very fast, just slow down the video, or you can go back and repeat these statements that I'm making so that you can be of use to you when you're looking for them on the charts, just like we are going to do. Now, this is how we define a head and shoulders, right? We have that one that indicates that buyers are soon coming to the market. And then we have that one that indicates sellers are soon coming to the market. And you have to know that where do they happen? This one happens at the end of an uptrend. When the market is moving up, 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 it's created at the end of an uptrend. This one here. This one is created at the end of a downtrend. Are we together? This is what we call a head and shoulders. I hope we have understood. Anyone who is lost? Anyone who is lost? If you're lost, just comment below. We are going to pick you up from where we have lost you from. Now let's talk about the types. Let's talk about the types of the head and shoulders. We have already hinted on them. We have two types, but those two types again also they are broken into SA22. Now the first one we talked about, just the proper head and shoulders. This one here, which gives you a shoulder, comes down. Remember, these are turning points, right? Then the market breaks this turning point, breaks it, and comes here. Now, the moment the market reaches this support and comes back to this level here, there's a high probability that's going to come here and then break it down. So this is what we are talking about, the proper head and shoulders that happens at the end of an uptrend. Then we have the inverse head and shoulder, which happens at the end of a downtrend. How does it happen? The market comes down, creates the shoulder. This turning point is created, and this one. So it will come up and come and create for you this turning point and then pushes up. Remember, it's on a head and shoulders. We're going to look at the rules when this neckline is broken, when these two turning points are broken, as we are going to be looking at the charts. Now, not every time that the head and shoulder is going to be this smooth, right? Now, there are other types which sometimes look a bit funny, but we have to know about them. Let's start with the first side of the straight head and shoulders. Let's look at all their types. The first type is going to be this straight one, which gives you this head and shoulder like this. This is the neckline, right? It will give you this. This is the head, this is the shoulder, this is the shoulder. This is the first one. Then the other type is going to give you a shoulder, moves up, creates the head. This is the shoulder, creates this turning point, right? Then it comes, breaks all these points. Then stop here. Remember, the first one is stopping here. This one then stop here, and then comes and stops here. And then it can either retest here to push down, or it can retest here to push down. Let me just repeat this. A head and shoulder may create a high, come create this turning point, pushes up to create the head, pushes down. Now, instead of coming to stop here, like this first one, it will instead break it, right? Then comes up. It can either retest this one to push down here, or it can retest here to continue down. Now, this other second type, people have given it names. People have are giving it, I think they're calling it something, a change of character, something like this. But this is simply a head and shoulders, guys. This is simply a head and shoulders. I don't know how you guys call it, why you guys are giving it different names and all that. But if you understand how price moves, if you just watch all the videos that we post on our channel, the content is the same, like following each other, like they are related. How are they related? Why are they related? They're related because price behaves the same. The rules to price are the same, no matter what type of market you're trading. So these are simply just price behaviors. No matter the names you're trying to give them, how you're trying to make them sound sweet, look nice and all that. But this is just simply a type of head and shoulders. So the market, when the market does this, this is also head and shoulders. And in most cases, this neckline this time can be drawn by a trend line, something like this, like a trend line. Not a horizontal line this time around. It can be a trend line, right? So this is the one for the head and shoulders, the straight one that happens at the end of an uptrend. Now let's look at that one that happens at the end of a downtrend, the inverse, head and shoulders. Now the market comes down, creates a turning point, moves up, creates a turning point, breaks down, breaks this turning point to create the head. This is the shoulder, comes and creates a head. The first one comes back down here and then breaks up. It only becomes a head and shoulders when this neckline is broken. This turning point in the middle here, these two turning points here, this is what we are calling a neckline. The moment this neckline is not broken, it's not a head and shoulders, or it's not an inverse head and shoulders. Be keen with that. Most traders are falling into traps or that are being created to provide liquidity. Do not be one of the people providing liquidity for us in the market. So this is the first one. Then the second one is just the opposite. The other second one is when the market comes down, creates this turn up, breaks down, right? Then instead of coming to break and stop here, it just instead breaks outside, right? Then it can either come and retest here to continue pushing up. So making this time the neckline will be a trend line or a diagonal line like this, right? So the market has to break, retest here, and then continues. Or the market can, instead of retesting just here, it can also come back and retest here, what most of you are calling change of character. I think this is in what you people call strategy. You have strategies and you've given them names, but price behavior is the same. No matter how you name it, price behavior is the same. You just have to understand turning points. The most important thing in the market, if you want to learn how to trade consistently, are turning points. The points where sellers came into the market and the points where the buyers came into the market. As simple as that. No matter how you try to name them, make them sound nice, but it's the same thing, right? So it can either stop here, retesting here, or it can come down to retest here and then pushes up. Are we together? So this is the second type. Now, these are the types of the head and shoulders, both the straight head and shoulders and the inverse one, right? And I've told you where they are formed and what they indicate. The inverse one is forming at the end of a downtrend, meaning buyers are almost coming to the market. There's a possibility of buyers. Remember, trading is about possibilities and probabilities. Then the straight head and shoulders, or just simply the head and shoulder, is formed at the end of an uptrend, meaning it's telling you that there's a possibility sellers may come into the market in case your rules are met or the rules of the head and shoulders are met. Are we together? So let's continue. Hope we are together there, guys. I hope we are together. I've not left anyone behind. Now, how do we use the head and shoulders? I've been hinting briefly on how to use the head and shoulders, or what are the rules of the head and shoulders. I've showed you where they happen and what they symbolize, or what they're probably trying to communicate to you. But now let's try to look at the rules. I've mentioned some of them. Now, you can actually tell that the head and shoulders is going to come into play. How can you tell that? When the market is making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Are we together? The market again makes a higher high. Now, the moment the market, instead of, remember, we expect the market to come and retest here. But the moment the market comes and breaks through and stops here, what comes to your mind is there's a higher probability of making a head and shoulders. Why? Because you already have a shoulder here and you have a head. Now, you will know that there's a higher chance. If the market starts losing momentum when it approaches this point here, right, it means there's a higher chance that it's going to come back down here. Are we together? Then it will be even very, very nice when it breaks it. Now, this makes it a head and shoulders. The moment it stops here, it's not a head and shoulders. Guys, listen to this very carefully. The market makes this high, makes this turning point, makes a high to create the head, then comes down, instead of stopping here, breaks and stops here, and then comes up. Do not assume from here. Most people, this is what traders are doing, the mistakes traders are doing. Do not assume from here that now we're going to go down. The market can continue up, right? The market can decide to continue up, but it will only become a head and shoulder when we break this turning point. This is what we're calling a neckline. All together. This is what we're calling a neckline. When the neckline is broken, you know that I've created head and shoulders together. Why? Because I have broken a level of support. Now I expect a retest to this level and then to push down. The same applies to the inverse head and shoulders, just the opposite. When the market makes a low, makes a high, makes a low. Now, the moment the market breaks above, comes here, you know that I have a possible shoulder, I have a head. Now, there's a possibility that when the market comes and gives me a loss of momentum, more change of trend, and breaks up, my head and shoulder is complete. It has given me a second shoulder. What am I trying to put across here? What am I trying to emphasize? The neckline should be broken. This neckline here should be broken. This neckline, this middle thing is acting as a resistance in this one here. While in this one, it's acting as a very strong level of support. So this support has to be broken so that we have a retest here. We're together. Because this is a shoulder, shoulder, head. Do not take trades from here. The market can easily go up to create a W retest and then continues up. And you lose money because we know that the market does not move smooth like this, higher high, higher low, higher high, higher low. The market doesn't move smooth like that, or it does not move just while making lower lows, lower lower lows, lower highs, lower lows, lower highs, not smooth like this. It moves while creating some things like this to trap people who do not know what they're doing in the market. So please do not fall into those traps. Do not become victims of giving us liquidity in the market, right? So then another thing that I would like to put across is, where do you take the trades from? What particular points would you consider as your entry points? Now, we have two types of traders. We have those traders who want to take their high risky traders, right? They understand their risks and all that. And then we have those people who are very conservative, like myself. Now, if this is a head and shoulders, right? The market has broken here and comes back here. When it gives you a loss of momentum, all your rules are met here. This can be your first point of entry, the first one, right? Then when we break down and on the retest, we can have our second point of entry. The same applies to the inverse one. The market creates this, breaks down, comes here, retests here, and then breaks back up. This can be your first point of entry. Then this one can be your second. Are we together? So these are the points where you can consider taking your trades. But remember, the rules must be met. Most traders are just trading basic support and resistance with confirmation. What is your confirmation? Bullish engulfing, bearish engulfing, and all that. If you're still trading like that, I can assure you, I can guarantee you will never make money, because the market can create a bearish engulfing even when it's still going to go up. I'm sure most of you have been victims of that. You may think you've drawn your levels and all that. The market is not just being controlled by those lines you're drawing. Those lines are being drawn by you. It's not what the price is going to depend on, because so-and-so has drawn a line, so-and-so has drawn a resistance. No. That's not how it is. The market is not going to respect a line because Paul has drawn a line, so-and-so has drawn a line. No. Right? So there are many things, if you're trading the normal markets, besides those who are trading synthetics. If you're trading normal markets, I mean like commodities market, forex market, and the others. If you're trading those markets, you have also to include certain things like the interest rates, the GDP, and all that. I'm not saying you should focus so much on them, but you should be aware of their impact in the market. Those things are like that. Those are fundamentals. They're like fuel. So you should also put them into consideration. You cannot say that you're a trader without putting those things into consideration. You can either learn to trade alongside them, but you can't say that you're going to completely avoid them. Some people say that technical analysis alone, you can do that. Yes, fundamentals are fuel to the structure being formed by the market, but you need to know. If you don't want to give them so much attention, you need to just know how to play along with them. We're together. So that is how we use the head and shoulders. So having said that, let's now go to the charts. We have seen what they are. We have seen how they are formed, in what types of markets they are formed, and the different types, and how to use them plus their rules. Now let's go and try to identify them on the charts and see if really the rules we have spoken about really work, or we are telling ourselves stories. Are we tickling ourselves, or we are really studying things that are going to help us in our trading journey? Let's go to the charts. So I'm on my charts, and today we are using my MetaTrader. I'm not using the trading view because I would like you guys to have a feel of having the different types of platform of doing analysis that I always talk about in the different videos. So today I'll be using my MetaTrader 5 from the derivative broker for synthetic indices. If you do not have an account for trading synthetic indices, please just check the link in the description and make sure you get yourself an account and you're able to trade synthetic indices, which operate 24/7. You can even trade over the weekends, and fundamentals do not affect them. So let's just go into checking out the head and shoulders that we have seen. Now, before we go any further, let's like to let you know, guys know that time frame is also important for the purpose of the for you to get the use of the head and shoulders. Now, for example, what you get in the head and shoulder in the analysis time frame is for getting area of interest, and the one which you get in your entry time frames is for area of entry. So the time frame also plays a big part in you identifying these head and shoulders. You may identify the head and shoulders, but the question is, where have you identified it from? What time frame? So if it's a specific time frame, for example, where you do analysis from, you can't use that head and shoulders take entry. If you have gotten it in your entry time frame, you will use it for your entry. But again, you cannot use that in your entry time frame to do analysis to identify area of entry. I just thought I would put that clear before we dive into this. So I'm using volatility 50. Of course, it may be new to some people, but like I've said, if you want to get started with this, just make sure you get an account with this broker. So let's look through our chart. Let's just pick a random place and we look through our chart. Now, oh, I already see something. Now the market created this high, came down, then created this high, and then created this higher low. Now, remember, I've been telling you guys, sometimes you're going to create a W and an impulse. So we have a whole video about impulsive moves that we're soon going to put out on our channel. Make sure you subscribe and you hit that notification bell so that you don't miss them out. Most people do not sometimes understand why the market did not come back here, but stopped here and then pushed up. So you could have missed this move if you're an intraday trader, right? And why did the market come back to this specific part? It's all going to be in that video. So the market created this turning point here and then pushed up, created a high, and then broke down. Just look at the rules that we have been studying. Broke down, right? So let's just let me just clear this and then we try to mark using the rectangle. The market came up, came down, created this turning point here. The market went up, broke this previous turning point. Are you seeing? Here. So it created this head and broke back down. Are you seeing? So we came back here. When the market came here, we expected it, of course, to come to retest here and then come and break down. Now, someone will say, but it broke it down. This is a false breakout. This is not a real breakout. It's a false breakout. We're going to look at all the characteristics of proper breakouts and false breakouts. This is a false breakout. So this is not a proper head and shoulders, right? It was trying to created the first shoulder, give us the head, and then try to give us a second shoulder, but failed to give us a breakdown with a proper retest. So those who took the trade here, because there's a trade here, we had an M plus a retest. So there's an area of entry here for intraday traders. You could have taken this trade up to this level. But for those who take from here, there was a false breakout here, which many people would have fallen for, but we're going to learn how to identify that, right? So this was not a proper head and shoulders. Now let's continue. Let's continue. Let me just delete this. So now, again here, the market came, we're using now this. Now the market broke above this level here. It broke above this level, right? So when the market breaks a resistance, what does it become? Let's just mark it. What does it become? Let's mark this area here, right? So the market broke this level. Remember, it had created this turning point here, which it had made a false breakout with, right? So it broke this level, came back, right? So it gave you this shoulder, gave you the head, it came down, then gave you a lower high, of course, with this area here, a lower high, and then consolidated here, and we had now a proper breakdown, right? So this is your shoulder, this is your head, this is your shoulder. Now, someone is going to say, but why isn't it looking like how we drew it in theory? Now, this is theory like I always mentioned, and I mentioned it even when we're doing the video that when we're doing the theory part, that the market's not going to move smooth like this, right? But you just need to understand the rules of how it moves and you apply it on the charts. That's why after doing theory, we have to come on the charts and look at these things, how they appear on the charts, right? Because most people assume that this is how the markets move. No, the market doesn't move smooth like this. Like you can see, the market created this shoulder, but in the shoulder here, we had another M. We had another structure here, retested it, and then pushed down. By the way, if you do not know the rules of M's or shapes, the M's and W's, we have a video about that, very well explained. You can be able to use it. So now we had our first head and shoulder here, the shoulder, the head, and then we had a shoulder with a lower high, right? Then consolidated a bit and broke down. So this was a nice head and shoulder. Now, what characteristic can you take of a very nice head and shoulder is if the market gives me a shoulder, gives me a head, right? Then either it gives me a lower high or comes back here. But if it gives me a continuation pattern here, it can either be a wedge or a channel, or it can be a range. So if it gives me this, this would be a perfect one. So it's giving me a reason that the market is distributing to continue down, right? So it's what we saw here. Now that's one head and shoulder that we have seen. But remember, we're in H4. So this is one of the entry timeframes, meaning that these levels, you're using them to take trades, not for area of interest. We're also going to go to a bigger time frame. Now let's continue. Now we have one here. We have one here. I don't know if we can see this here. Now the market came, was creating higher high, higher low, higher high, higher low. Let me just highlight it for you. It created this high, higher low, high, higher low, then created the high. Now in this process, we had the market giving us a head and shoulder. Someone may say, where is it? Now the market created this level here, right? Let me just adjust it properly. Created this level, right? Here, gave you this high, higher low, created the head, broke back below, retested this area, and then broke below this area. So this is the neckline area. Remember, we said in the rules that the neckline should be broken. And this is another head and shoulder that we see. So look at the rules that we talked about. We came here, retested here, broke down, proper breakdown, retested this area. Of course, didn't touch properly the first time, but came and tested it here and then pushed back down. Then again in the process, to give you another head and shoulder. Shoulder, came down, created a neckline, head, neckline, shoulder, broke down, retested it. Now let's look at this. Let's just mark it again. Let's just mark it. The market came, created this high, right? This shoulder here, then created a turning point here. You can see the market clearly came and gave you this shoulder, came down, broke above, gave you the head, broke down, came and retested back this area here, then broke down. And came and retested this area here, then moved down. Of course, created double tops, but then moved down. Following the rules, remember I've just told you that the market won't move smooth, lower low, lower high, lower low. No, as long as it is respecting the turning points. These are the turning points I'm talking about. And I mentioned also in the theory that turning points are very important. If you're a trader, you have to focus so much on the turning points. No matter what strategy, you people like calling them strategies, no matter what type of strategy you're using, no matter, but of course, anything with price moves the same. You just have to have rules that apply for you, that you're comfortable with, that are convenient for you, that are easy for you, that you understand, that you've practiced and you're used to. Otherwise, prices move the same, whether in crypto, whether in stocks and all that. Just a few fundamentals may change here and there, but price moves the same. So I hope this is enough example for a lower time frame. Now let's try also to go to a bigger time frame. Daily. Now here, these areas we've been marking for area of entry. So meaning that you're going to take entry from here. You just look for change of trend and take your entry. But now you just look for your rules of entry and you take the trade, because we're in H4. All the time frames are for entries. Now when we go to bigger time frame, let me just delete these objects. When we go to bigger time frame, let me just delete this. When we go to bigger time frame, let's say, like, let's choose daily. We can choose any. You can choose daily. We can start from anywhere. Okay, just to save time, let's start from here. Now, the market was making higher high. It made the high, higher low, higher high, created this turning point, and then gave us a head, a false breakout, broke back below. Let me just show you here. Let me just clear this so that I show you what I'm talking about. Now, the market created this turning point here, the high, right? Then gave you a low. But remember also, don't forget, you can mark these things using a line, right? So you can mark these turning points using a line so that if these rectangles are big for you or you're not comfortable with them. So I'm marking these turning points with a line. So remember, lines are for making decisions for us. So the market gave you this shoulder, of course, consolidated, and gave you a false breakout, came back in on the turning points. Are you seeing this? Turning points here. Again, consolidated, right? Remember, I told you when the market gives you a continuation reason, let's say channel or pattern that is showing a continuation, it's a best one. Now the market broke down, retested, and then pushed down. This is a head and shoulder in a bigger time frame. But now in a bigger time frame, when you mark this level here, you're not going to just take a trade. You have to drop to the lower time frame so that it gives you a change of trend in a lower time frame. For example, let me just mark this area and you see what happened in an entry time frame. Let me just clear this. So let me just mark here. I'm just going to mark it with red. Let's change the color to red so that we see what happened here. Now let's drop to a lower time frame. Let me just see where we are. We are here. sorry, this was the retest here. So when the market came back up, you can clearly see that it gave you a push up to retest here. And while it was retesting, still it gave you a structure, one of the structures that we have studied, and we have given proper education on it on the channel. You can just look through the M's and W's videos somewhere in amongst our videos. So it retested it and then pushed down, right? So when this retest happens, don't just take a trade because it doesn't happen. You have to look for what we call change of trend. This area is being given to you for change of trend. We're together. So that is it, how you use head and shoulders. Let's just go back and look for one more. Let's look for one more. We have looked at this. Okay, so we also have one here. We have one here. Let me just show you that did not play out, right? So the market was making higher highs, higher lows, higher highs, higher lows, higher highs, equal lows, higher high. So broke this level and broke down, right? Then came back down, came back to retest this one to create a higher low. Remember the other type of head and shoulders. Now let's just mark it properly. Let's just mark it properly here. So it created this high, right? The market also broke this level, but it gave us a retest in an exhausted way. So there's a pattern here. Those who trade using patterns, you can see that there's a pattern here. So this was supposed to be our second shoulder, but it didn't play out. Now, why did it play out? Let's just check the reason why it did not play out. Let's just mark our levels. Those who use levels, you can use this area here because we have the previous turning point, you can see, which makes it a neckline. Are we together? So the market failed to take out this neckline area. This is what I mentioned to you guys, right? Wait for the market to break. It created this shoulder. This is a shoulder, this is a head, this is a shoulder. But it failed to take out this. So only those who found a trade in this area here could have sold up to this area. But if those conservative traders, there was no trade for you because the market didn't break below this area to retest, give you this area of interest, you go to your entry time frames to take it because we're in a bigger time frame. Instead, it bounced back up, right? And it again created a new head and shoulders here. So the correct one is this. It gave you another shoulder here because it was respecting this extended, if you extend this level, gave you a shoulder here, gave you a neckline, gave you a head, came back, gave you a shoulder, and then broke the neckline. Can you guys see all this neckline here? Let me just mark it. Let me just delete all these objects. All right. So that I show you properly. The last one, the current one. So those who trade synthetic indices, actually you can use this analysis. You can use this analysis. So the market gave you this shoulder here, right? And also gave you this neckline area and broke down and retested it, right? So we are now starting, we made the low, we made the lower high. We have now made the lower low. So we expect a retest to this area here, and then we see if the market will give us a lower low, right? So you can, if you're trading V50, you can just come and mark this area. If you want, you can even extend it up to this side to see historically how it behaved, this whole area here, right? So as the market approaches here, just go to your lower time frame to observe what the market does here. If it gives you a change of trend, then we expect the market to continue down because now we have started making lower low, lower high, lower low, then lower high, then we expect to push down. As usual, market is about possibilities and probabilities. We don't have to guess, right? So that is how we trade head and shoulders. I hope you guys utilize it. And if you found value in this video and you're new, you've just come across the channel, do not forget to subscribe.